Welcome everyone to tonight's Nightly Market Intelligence Report. Today is December 16th, 2013, and the time is 6:55 p.m. Eastern Standard. The new contract month is now been installed into all the charts for the S&P 500 mini futures. The new contract month being traded today and forward is now March 2014. Our smart money bias market trading call has been reduced in strength to a short level 6 because of the most recent data points, a combination of open, close, and open, sitting right at a level that I have previously laid out on this report at about the 15,739.50 area. This close, this open, and near to this open right here, 3 different data points located at a level that I have broadcasted out from this price point into the future. Prices have temporarily halted at this point right now and traded up today to close at 15,884.57 from this level. So this level has now become more important than previously anticipated, and is a possible point where prices could start to move sideways, trade up from, but at this point it is way too early to make that determination in isolation, just looking at the price chart pattern. The next level to the downside for support at a major support level, again, is 15,591.54. Current resistance points are 16,025.53 and 16,105. and 16. These are the absolute levels that have been laid out on the Dow Jones Industrial Average using this side of the equation on the equities market to determine the current state of the U.S. markets and the higher probabilities for future directional price movement. Again, new call tonight, a short level 6 here, a reduction in strength to the downside from a level 7 just last night. And again, no new smart money coming in just as of yet on the equity side. We are overdue right now. If you look at the length of time between here and this volume spike and that volume spike to the subsequent last one that has come in of any real high-powered volume back on 9/20, we're overdue. Any day could be the day, and I wouldn't be surprised if it is as soon as tomorrow or the end of this week. Let's go through the indicators. The prices are trading up marginally from that support level that I just showed you, but the indicators themselves are still clearly headed to the downside with a lot of room to go to the downside to get to their oversold areas. As we look at the Chaikin oscillator, a temporary stalling point as well after a severe move to the downside with a lot of strong momentum, prices still could catch up and get down as far as here before more real support as found. Out of the pattern, intermediate term negative divergence as compared to the price's trend line violation, and here we are all the way down here as compared to this peak and where the prices are trading right now. The money flow index continues to move to the downside with a temporary halt today, seemingly unaffected by the up close. And let's take a look at the longer-term Chaikin money flow, 21 period, totally unaffected by the up close today and continues to move to the downside after 1, 2, and 3 different trend line violations. The disparity between the MACD and the signal line is still very wide, and only a small beginning of sideways movement today, unaffected again by this very small up close. And there we have the conclusion on the Dow for now. Again, short level 6. Let's get right into the sectors and the ETFs that are traded against them. We have a lot of stops in place here in case we have another up day or possible 2 before the market may continue to the downside with the way the indicators are set up right now. On 40 Financials and XLF, we have a short call again tonight with a well-placed stop in case this continues to trade up, so we don't really give any money back. The best that we like to do here is take the best setups, and with the best of those setups in at the most opportune time. If the trade goes against us, the majority of the time we're out with a break-even trade, or we lose a point or 2, and that's it. We cut these losses extremely quick. So on 40 financials and XLF, again, short with a well-placed stop. You're going to hear a lot of that tonight. We have a possible trade out tomorrow to book a profit here if this continues to trade up. And why? Because in this instance, the SMI index is all the way down here, and it has made a cross from below to above the actual stochastics line itself today. So I'd rather book a profit than give anything back, even if the market continues to the downside. So that seems to be the case for tomorrow's trading. That will depend on what happens in the overnight futures market. If the market tanks, and obviously equities will catch up as they did on the way up for the open session on that end. On 25 consumer discretionary and XLY, we're short with a pro stop in place here as well. A lot of room to go, still the downside here. I'm unaffected by that update right now. And here on 35 healthcare and the ETF symbol XLV, we are short again tonight. Here, 55 utilities and XLU, we are short with a protective stop in place. And here, after getting in short at 585 4 sessions ago, we remain short again with a stop in place. 30 consumer staples and XLP, we're short tonight with the stop in place. And here, 15 materials, we don't have any setup. There's no sense in trying to second guess this sector and the assigned ETF to trade against it. We're not going to waste any time, any emotional capital, any real money on anything that is not a high probability trade setup. So no call here tonight. And here, long tail up suggests tomorrow's move could be to the upside. We are below the negative 50 level on our special stochastics momentum indicator setup. Across is just about in place. So if this trades up tomorrow, I can assure you that we will be out as fast as we got in and go for the break-even trade. 20 industrials to finish it up, and XLI traded up, and we got out with a 2-point loss today, stopped out right here at 462 after getting back in on a short reverse and reverse again, and produced a very small profit in the larger picture of it all and lost only 2 points as compared to a gain of 4. So nothing to lose to get in at the opportune time, because if the market moves in the anticipated direction, the preferred fill is always the best possible entry to get the larger portion of the profits as the market may trend for a longer period of time. I have no problem with any of this here. So getting back to financials and finishing it up, this is where we stand. And on the futures, the indicator formations are somewhat more advanced, not in a big way. Again, we are now in the new near month contract being traded. We have rolled it, and we have checked all the data today. The current mark to the market price is 1778.50. Now, when I did my analysis some time ago, the new session was not even open. We were about here at this time. And finishing up and coming back to this, I have laid out the most recent current support level, which you can see has actually been hit here at this bar. So it appears that the initial analysis that was done tonight may prove out to be one more trade that was called in advance, as we had on last night's setup for the overnight session, that we called an actual move that happened, a very, very fast, furious move to the downside, a lot of points gained, which at the end of it all was a major shakeout before the up move. But the indicators and the chart pattern associated with those indicator formations and the levels that I had laid out in advance, as you saw in the report, was the epitome of a true high probability trade, and it went in a big way. So we had a lot of emails about that today, and I thank you for the positive comments. As we look at what we have here right now on a 15-minute chart setup that we're going to get into shortly here, before that, 1783.50 is the current resistance level. It's laid out by here and broadcasted out. 1778.25 is the current support level. What we would need as time moves forward is to get through this level here with some substantial volume, Let's take a look at these 15-minute indicators and see what we really have here. And we'll start with the SMI index that I have laid out these levels here in accordance with what we have right now. The SMI can remain in overbought and oversold territory for a long period of time, depending upon how the market continues to trade in the short or long direction. Where this is bottoming out below our negative 50 level, it is possible that prices from a 15-minute standpoint could find 1777.25 and then trade to the upside from there. On a 15-minute chart layout, we have an opportunity to get to 1777.25 with a price profit target from the stair step down all the way down to 1770.50. If that's the direction of the market, these are the entry levels here that you saw on a 1-minute chart, but now on a 15-minute chart being 1777.25, and the price profit target becomes 1770.50 to the upside. If prices get to 1777.25 and hold that level, or where they are on the 1-minute chart right now, and move sideways long enough for the indicators to reform themselves and then provide a long trade signal that can fire with volume, well, then the obvious price profit target would become 1783.25. Looking at the indicators flattening out on the EMAs right now. Looking at the check and money flow longer term perspective of the smart money's participation. At this point right here, this could go either way because it is basically trading market net neutral. And as we stand, we have 7 minutes and 14 seconds within the current 15-minute bar for any absolute changes that will take place within here as prices continue to move sideways, and the indicator would then trade on a violation to the upside, or may even trade out of it to the bottom side. Another support level within the indicator itself. Very powerful news here. And again, looking at one more indicator, the MACD is clearly crossed way back here and has never looked back. So if the money flow, as in last night, will completely fall off to the downside, there's a lot of room to go here between where this indicator is now and where its previous cross was when things began on the up move, again, at around this point, and moved up. A lot of traders traded this move here and made a lot of money right about here and got out of the price profit target here and here. So that was a great move for a lot of people that came through the door here. The short-term MFI is pretty much bottomed out here. So right now we have a non-high probability trade setup that can turn into one, but it's going to take time for these indicators to provide a better setup as compared to the prices in order to consider trading anything. And if there is nothing to trade, you know what we do? We as professionals do absolutely nothing and wait for the next great trade to set up so that we can trade it and pull in the lion's share of money in the shortest period of time. And that's exactly what we will do. This market is ripe for a major move. And we are poised every single day to take advantage of that move. Don't forget to take a look at the updated nightly market intelligence report newsletter that's associated with this email that you'll get tonight. For all new subscribers, there's a lot of stats in there. There's a lot of history behind everything that you're going to see. Very advanced statistics, and we will see you again tomorrow on the next report. Good night, everyone.